We live. Hey, what's going on, y'all? What's going on? I'm gonna wait for a few other people to come in. What's going on, y'all? What's going on? If y'all could just Message in the chat. Let me know that y'all can hear me. Let me know where y'all joining us from. And I appreciate y'all getting on with me today. What's going on, y'all? We're gonna get started in about 2 minutes. We're gonna give everybody about 1 more minute and we're gonna go ahead and get started, y'all. All right, y'all, I want to thank y'all for joining. Before we get started, first thing we want to do is pray, because we always pray before we get started in the markets. Dear Lord, we want to thank you for this day. We want to thank you for life, health, and strength. Lord, I pray that this resource would be used for somebody's benefit. It can be used to help somebody financially. Lord, I just pray that anything I say can be a blessing to somebody. And Lord, we do thank you and praise you, and we ask these things in Jesus' name we pray. Amen. What's going on, y'all? This is our very first YouTube live. I want to thank y'all for joining. And so basically what we're going to do today, we're going to go over some of my favorite pairs. If you guys have any pairs that you guys want to put in the chat that you want me to go over, I'll be happy to do that. So the markets actually start in a couple of hours. So I wanted to kind of jump on the charts, go through my weekly analysis, how I approach the charts, how I approach pairs and things like that, what confluences I look at, what news I look at that can possibly affect those different pairs. So we're going to walk through them. All right. So first thing I usually do whenever I get to the market is I go to this site here. For those who are, absolutely new traders, one of the things that I do, I usually go to this site, Forex Factory. So this is a huge site within the Forex market because it gives you an analysis on, the pairs throughout the week, the different countries and things like that, what times that can potentially affect that pair. So for example, if we look at this on Sunday, when the market's open, we can see we got these yellow folders. These yellow folders are just, they're giving news and things like that. But some of the folders that we really, really want to concentrate on are the red folders and the orange folders, because the red folders, those are the folders that's showing that there's a big impact depending on whichever pair that is. So if you notice at 7:30 tonight, the Australian dollar will have some sort of impact. So if you click on these folders, it'll break it down and it'll actually give you an analysis and kind of talk about what exactly is going to happen at that particular time when you're looking at it. All right. So one of the things on Sundays, I don't really take too many trades. I usually spend Sundays just to prepare. So as we can see, as we're going through the different days of the week, on Monday, like we said, we have the Australian dollar have some impact. Tuesdays, we see the euro, because I do trade euro USD. As we can see at 7:30 in the morning on Tuesday, we got some USD news. So USD usually have a lot of confluences that happens at 7:30 in the morning Central Time. If you're Eastern Time, then it'll happen about 8:30 Eastern Time. So as we can see, look, Wednesday, here we go, 7:30 again. We got some USD and some CAD news as well. So we can tell that Wednesday and Tuesday and Wednesday will be some potentially big days when it comes to the market. Okay, on Wednesday, we have what is called FOMC. So usually whenever we get an FOMC in the afternoon, you can definitely bank on whatever USD pair that you're trading is going to definitely have some big moves within the market. So at that time, one of the things for me, I don't trade news that much like that, because when those pairs are affected by the news, it can be extremely sporadic. You know, it can shoot up, you know, real fast. It can shoot down real fast. And if you're in it, you know, it can stop you out, you know, and you can really potentially lose a lot of money if you're not doing that, if you're not trading it smart. So like I said, for me, I don't really trade the news. I'll wait till the dust kind of settles, especially for this one here. And then I'll kind of reevaluate to kind of determine what I'm going to do. Thursday, I said we got some 7 a.m. news for the GBP pairs for the British pound. We got some confluences with USD on Thursday as well. We got a couple orange folders. 8:15 as well. I can see the Japanese yen might have a little action around that time. And on Friday, we got some CAD pairs and possibly some USD action as well. All right, y'all, let's go ahead and jump into the market. So that's pretty much the analysis that I look at as far as the news. And this can change as the week goes on. You know, some folders can be added and things like that. So before I jump into markets, I usually trade the New York session. And the New York session, because I'm Central Time, the New York session is usually from about 6 till about 12 noon or so, or 10 or 11 or so. So me, that's the time I usually trade. I'm usually in the charts early. So those are the times that I'm on it. So we're gonna go ahead and hop into the charts. And so another thing I usually like to look at, because I trade a lot of USD pairs, I like to look at the DXY. So the DXY is the US dollar. It's the dollar currency index. And basically, for example, when you're looking at currency correlation, and what I mean by that, let's just say, for example, if you're trading Euro versus USD. And as you can see, let me go ahead and make this bigger. So let's just say that you're trading Euro USD. Anything in the denominator, if this currency is going up, the DXY, if it's going up, that means anything in the denominator will possibly go down. Affecting this pair, it'll possibly go down. So basically, when you look at this, you can look at it from this perspective. DXY, you can say if the DXY is going up, I did that all wrong. If the DXY is going up, then any pair with USD in the denominator possibly will go down. And that's depending on if there's some intense news with that pair or something like that. Now, when you're looking at gold has USD in a denominator as well, but gold is an index. It's not necessarily compared to a normal pair like a Euro USD. So gold might fluctuate a little bit. The DXY can go up and gold can go up as well. It just depends on how you look at it. All right. So let's go ahead and jump into our pairs. So me, I only usually look at 5 pairs. I look at GBP USD, Euro USD, USD CAD, GBP Chef, and gold. Gold is my favorite pair, but I'm gonna go ahead and start with GBP USD. So one of the things I like to look for when I'm looking at a pair, I like to go to the weekly time frame. And let's go ahead and blow this up a little bit. I like to start off on a weekly time frame. That way I can say, okay, what is this pair doing? You know, what's the story that it's trying to tell me? You know, what direction is it going in? So from the weekly perspective, I can see that this pair was, it started off bullish for a second. So as we can see, let's see, it was making some higher highs and higher lows. So we got a high, low, higher low. And then we got a high here. And this here could possibly be, let's see something. Yeah, this is our last higher low. So as you can see that we got a break of structure in this area right here on GBP on the weekly time frame. So we'll say we got a BOS right here. We got a break of structure. So you can see that the market has changed and we're in the down structure now. So we got a high, lower low, lower high, lower low. So as you can see, price at the end of the week is stopped here. And so basically I like to say, okay, from a weekly perspective, where did price stop? We have some order blocks right here. We have a bullish, bearish, bullish, and we can see that this is a level of demand right in this area right here, which is where price stopped at the end of the week. So what we want to do, we want to go ahead and mark our demand zone. And then from here, we can start breaking it down and start doing top-down analysis from the different time frames. So we're going to go ahead and go to the daily time frame. That way we can dial down on price to kind of see exactly what the picture is from a lower time frame perspective from the weekly. The weekly is going to give us the big picture, but like I said, the daily we can kind of start to see intimately what is going on. So as we can see, if we look to the left, we'll notice that we have another order block right here that formed on the daily. So we're going to mark that up as well. And we're going to utilize this daily demand zone as our main point of confluence. So as I'm gonna go ahead and just move this weekly on up to this area right here. So this is going to be our daily order block right here, which is going to generate our level of demand from a daily perspective. And then from there, I'm gonna go ahead and break it down to the 4 hour just to kind of look at price and see what it's doing. So as you can see on the 4 hour, we got a high, lower low, lower high, lower low. So one of the things with this pair, because if you're looking back from the weekly perspective, you see that we broke this last low. So if you know market structure in a downtrend, we know that price has to come back and retrace in some sort of fashion. So right now, that's what I want to kind of look for. I want to see if price is going to start to give us a pullback. And so if that's the case, what I'll do on a 4 hour time frame is I'll mark this area here because this is my last lower high. So I'll say, you know what, let me go ahead and mark this as my 4 hour break of structure, because one of the things that I want to look for before I even mess with this pair, if price can come up here, break this area, give me a retest, which will confirm that it's going to break structure, then price can possibly go up to the upside and I can possibly take a trade here and then possibly ride it up. However, what I want to do is I want to pull out my Fibonacci tool, which is a tool that measures retracements. In this particular instance, I'm sorry, I don't want to use this right now until it breaks structure. So when this breaks structure, then I'll know to pull out my Fibonacci tool, and then we can actually look at the market from there. But what I'm gonna do, I'm gonna put an alert on here. That way we don't have to waste a lot of time. And if this breaks structure, it'll alert us and let us know. Let me see, GU, BOS, let me see, 4 hour BOS. So it'll possibly let me know that, we have a bigger change and price will shoot to the upside. But before we move to another pair, let's go ahead and drop it down to the hour and kind of take a look. And as we can see on the hour, we get a break of structure well before the 4 hour. We could possibly catch another entry before we get to this area here and possibly scale in. So as you can see, we got a lower high, lower low, and then this broke, lower low, lower high, and this broke the last lower low. So now we can put another alert here for GU and say, okay, this is a 1 hour BOS. So let's go ahead and set an alert for this. That way, if we get a break of structure, we can possibly wait for a pullback and we can ride price up to the upside from here. GBP USD BOS, 1 hour BOS. And so basically one of the things that I do, I set these alerts. That way I don't have to sit on the charts and watch them all day, you know, so you can just be patient and just kind of see where the market is going to take you. All right. So now from there, I got, you know, a couple of areas in which I want to look at for the week for GBP USD. And so, like I said, if price shoots up here, break this 1 hour BOS, I'll look for a pullback, take an entry, and possibly ride it up to the upside. Because if we notice let's look at the daily one more time. If we look at it from a daily perspective, when we start to get this pullback, if we throw a fibs on this, we want to look for price to possibly come back in this golden zone up in here somewhere, you know, and possibly break this area. We don't know. So we'll see, but we're just going to be patient and let price, you know, kind of come to us. All right, let's move over to Euro USD. We'll kind of go through the same ritual, you know, start off on the weekly time frame. Let's look at the big picture and kind of see what price is doing. So as we can see on the weekly time frame from Euro USD, we're in a downtrend as well. You know, high, lower low, lower high, lower low, lower high, and so on and so forth. And so we kind of ask ourselves from a weekly perspective, where did price stop? We can see we have another demand zone right here, and we can move this over, and we can see that price has stopped at this demand zone here as well, this level of demand on the weekly time frame. So we go through our same steps. If we break it down on the daily time frame, we can kind of intimately look at price to say, okay, what confluences do we have? And one of the things I noticed right off the bat from this is I noticed that we have an imbalance within the market, which is an inefficiency. Let me go ahead and make this a little bigger so you guys can see it. So basically we have an inefficiency in the market right here. And basically what I mean by that is you notice that this area right here and this area right here, there's a gap in between this because price has not closed the gap between this candle and this candle. So this entire area right here is what we call an imbalance in the market, or an inefficiency, or however you want to call it. There's three different words for this. There's an imbalance, there's an inefficiency, and there's also a fair value gap. You can use any one of those terms. They all kind of mean the same. But when you have an imbalance in the market, price wants to rush back to that area and it wants to close that gap. But I think that price has actually already closed this gap already. Let me see if I'm not mistaken. Yeah, it's already closed this gap. So this is a moot point because price already closed it. So we don't have to necessarily worry about that. So let's go here. So on the daily time frame, we can see that we had a lower high, lower low, lower high, broke down to another lower low. So let's break it down to the 4 hour and kind of see what we can see. So as you can see, it looks like price has given us a break of structure, but price is not really clean on the 4 hour. So I'm gonna break it down to another time frame. Let's look at the 2 hour and kind of see what we're looking at. Let's go to the 1 hour. Okay, so as you can see on the 1 hour, we got a lower low, lower high, lower low, lower high, lower low. And we've gotten a break of structure right up in this area here. We can even look at it from this perspective and say that we got a break of structure already on the 1 hour. So when we get a break of structure, we want price to come back and retest. So from this perspective, we can go ahead and pull out our Fibonacci tool here that we talked about. Like I said, it measures retracements. And where do we want price to be? We want price to be in our golden area before we look for any type of entries or anything like that. So we can see that price is already past 50% within our golden area. So we know we are well within the price range in which we want to look for to take entries. But of course, the market is not open. So we want to be patient and we want to wait and see what the market is going to give us. So we can see in this area, let's see, price has bounced off this area right here. We have an order block right in this area that price has bounced off of. that it's actually respecting this level of demand right here. So with that being said, we're gonna wait to see what prices. We're gonna wait to see what price is gonna do. So what we'll do in this instance, we'll drop down to the 15-minute, and as you can see, we got a break of structure all the way up here for the 15-minute. Because for me, the 15-minute, 5, and the 1 minute, those are the time frames I'll look at to actually take entries. But you want to look at macro. You want to look at macro structure to actually look at the big picture. 15-minute. Let me see. EU 15-minute BOS. And so for me, you guys, I like to set a lot of alerts, because these alerts, you know, they'll ring my cell phone, them things that get to screaming. That way, when price comes to me, you know, I can dial down and see exactly what I need to see. 5-minute and 1 minute. Let's kind of see. Okay. So yeah, we'll just wait till the 15-minute, and we'll let price do what it do, and then we'll wait for that. Let's see, lower high, lower low. We'll utilize this area right here. All right, so from there, let's move on to the next pair. All right, you guys, so this pair here, this is USD CAD. Let's check it out. Let's go to the weekly. Let's look at the big picture and see what it's giving us. Okay, so from a weekly perspective, I see we were initially in a downtrend, and then we broke structure right here on the weekly time frame. And like I said, you guys, we repeat the same steps, keep everything consistent. That way we can see the big picture, and then we can dial down to the smaller time frames. We won't have to do nothing new. So from this perspective, we got a break of structure. Now what happens with the break of structure, you guys? We get a pullback. So we'll take it from the swing high and the swing low, use our Fibonacci tool. We can see that price came back down to our golden zone, which we want to be. And then price started to shoot to the upside. Now, what is it doing? It gave us a high, higher low, and price is going to probably continue in this fashion to the upside. Okay. So with that being said, I see some other confluences as well. We can possibly use a trend line right here on the weekly time frame to kind of see, as we can see that price is actually respecting this trend line on a weekly perspective. And we'll go ahead and notate that. Weekly trend. Let's put that on the bottom. All right. So that's our weekly trend. So now if we break it down to the daily, we can kind of hone in a little bit on price action and see where it's trying to take us from there. So as you can see, we got a high, higher low, and then we want to wait and see if this is going to actually break this area here. Or we can see if it's going to actually come down to tap this trend, because we don't know if it's going to come down and tap this trend, then price can go in the other fashion. But one thing I want to notate, this is our last break of structure from a daily perspective. And if price breaks this, then we can possibly look for price to go to the downside from a daily perspective. Daily BOS. So let's go ahead and drop down to the 4-hour and kind of look at price from here. So as you guys can see, it looks like we were in a period of consolidation. So if we pull out a box, we might be able to trap price in this area here. Let's see. Let's change the color of this consolidation box, because you can see price was moving sideways. And from this, you can see that's when the buyers and the sellers, they were really kind of fighting in the market before they actually knew exactly which direction they were going to go. But for the more advanced traders, I could tell that there is some form of Wyckoff within this. And I'll kind of talk about that a little later in a couple of videos. But just to keep it short and sweet, price was actually just moving in a consolidated range to the side. But one thing that we notice is that it's still kind of sort of producing, let's see, higher high, higher low, higher high, higher low. So basically what we're looking at, we're still in an up structure because this here is our last higher low before we consider this as a break of structure on the 4-hour, because this is the last higher low that impulsed it to a high. And so as we're looking at this, we got a high here that broke this one. So this was our high. This came down. We're still in up structure, so to speak. Okay, this gave us our low and this broke up past this one. So like I said, we're still in an up structure. So what we're looking for is for price to possibly break this before it give us a retracement and continue on. But with this one, we want to kind of be patient and see what it gives us. I don't want to move around too much with this one. Let's see. Well, something we can look at though. Let's move this over a little bit. So on the 1-hour time frame, we can see that we have a downtrend here. And one of the things I'll be looking for me to even move on this particular pair is if price breaks this area here, breaks this trend, then I'll start possibly looking for buys if it gives us a retest. This is USD CAD. Let me see. 1-hour trend break. And so basically we just keep it consistent. One of the things I do want to look at though, if we go back to the daily time frame, I'm going to remove this consolidation box. I want to look and see if we have any supply or demand zones. So as I can see on here, we have a huge daily supply zone right here. This area right here. We have a supply zone right here. And I can tell that prices came back and it's came back to test the supply zone. And then from here, we can actually trap price a little bit because let's break it down on the 4-hour. We actually have a demand zone here. So basically for this pair, you know, for the week, we can actually trap price within these areas. That way we can just trade within these areas and we can utilize this as a supply and as a support and resistance type of situation, you know, just to see what price is gonna, you know, see what price is gonna do. So like I said, we're gonna work with this trend. If price breaks this trend, it'll alert us and let us know. We can see what it's gonna do. If it continues down to this area here, what we can do, we can set an alert right here. And we can say USD CAD approaching demand zone. Like our alert for this area here, I'll put it right here. But one of the things I noticed on the left side, looking at this, we have an imbalance right here, you guys. We got an inefficiency in the market right here. So, like I said, inefficiencies and imbalances, they act as a magnet for price to actually come back to those areas. So for me, I'm gonna put my alert right above that. That when price gets to that area, it'll let me know and I can be aware of it. All right, let's move to our last pair before we get to gold. Let's go to GBP Chef. British pound versus the Swiss. All right, the Swiss franc. So as you can see, we were in a down structure. Let's go ahead and go to the weekly time frame. Let's see, from a weekly perspective, look at the big picture. We can see that we were in a down structure. Okay, high, low, lower high, lower low, lower high. I'm sorry, lower high, lower low, lower high, lower low. Okay, so we can see high, lower low. We can see that price is actually broken this last low right here, giving us a lower low. So this validates as our last lower high on a weekly time frame. Let's see. Let's go ahead and go to the daily and see what price is trying to tell us. And as we can see, we got a lot of continuation order blocks. We got a bearish, bullish, bearish, bearish, bullish, bearish, bearish, bullish, bearish. We can see the price is broken down quite a bit in this area. But let's see if it's anything on this side, possibly where price has stopped at. Let's see. We see price stopped right here. So let's see where price, what it bounced off of. We got an order block right here. This is where price bounced off of, this order block right here. So we can notate that, because we can tell that this order block is respected, because as you can see, price pushed away and it came back to test it 1, 2, 3 times. Okay, so this will be our demand zone for this area. Let's go to the weekly so we can mark this up. Here we go, right here. So this is our demand zone that we're working with. All right. So now from there, we can kind of say, okay, we see prices bouncing off this area. Let's go ahead and repeat the steps that we always do. Stop to the daily time frame. Okay, we can see that we possible lower high here. Price kind of pulled back. And let's drop down to the 4-hour to kind of look at price action. All right, so we got a few things that we can look at. As you can see, we were in a down structure on this 4-hour time frame. This was our last lower high, lower low, lower high, lower low. And what do we have? We got a break of structure right here on the 4-hour, which let me know that price possibly ready to turn around after it hit this level of demand. So if we come down here, take out our Fibonacci tool, take it from the swing high, the swing low and the swing high, we see prices already came back to our golden zone right here. So what do we want to do from there? Let's break it down to the 1-hour. Let's go to a lower time frame where we can possibly catch a sniper entry or something like that, because it's already within our range of what we want to be. So on a 1-hour time frame, we can see, price is a little bit junky, so we can't really tell exactly. Let's see, let's drop it down to the 15-minute, kind of look at price. Okay, on the 15-minute, I can tell in this area, we have a break of structure on the 15-minute. So this is how we kind of look at this, you guys. We got a break of structure on the 4-hour. We can see prices come back. And when it came back on the lower time frame, we're in a down structure. You know what I'm saying? So then from there, we got a break of structure here on this last deal here, because we got a low, we got a high, lower low, lower high, lower low. We got a break of structure on the 15-minute. So we repeat the same steps. Let's take out our Fibonacci tool, throw it on here. Price is well within the range that we want to be in. So now from the 15-minute, we want to drop it down to possibly the 5, or we want to drop it down to the 1-minute. And we want to wait for a break of structure and a retest on this area, because this is going to be the area that we're going to actually take our entries from. So if we look at the 5-minute, we can see, let's see, we got a high, lower low, we got here. So we see that we got a break of structure in this area right here. Price is broken this area. BOS on the 5-minute. Now let's drop it down to the 1-minute. Now the thing that we want to wait for, let's check this out. Let's break this down, because we possibly can catch an entry on this possibly tonight or tomorrow, depending on what price gives us. So on the 1-minute, this is what we want to look for, you guys, because this is like I said, this is where we take our entries. So if we use our Fibonacci tool on the 1-minute, we got this swing low and this point here. And what do we see right in this area here? We see a couple of confluences that we can look at. We see a bullish, bearish, bullish order block right here. So this is our level of demand on our 1 minute time frame. And then what else do we see within this area? We see an imbalance. We see an inefficiency right here. So that, for me, that's two major confluences that tell me price wants to come back to this area. So basically what we want to see price come down, tap this area, and then we can possibly catch an entry to the upside. All right, so that's what we want to look at for this particular area. What I'm going to do, I'm going to set me an alert right here, because like I said, G-Chef might be the pair that we actually catch first for our first trade of the week. GBP Chef approaching, I'm gonna say POI, because this is a point of interest for me that price will possibly come down to. All right, I'm gonna put it right here, that way I can be well informed well before it happens. All right, so G-Chef look like it might be the pair, like I said, that we'll actually possibly catch our first entry from. So I like the way this is panning out to be. All right, so G-Chef, we done with our confluences for G-Chef, you guys. Let's get to our last pair. Let's get to gold. Now gold is absolutely my favorite pair, but one of the things I want you guys to see with gold, I'm gonna go to the weekly time frame and show you guys this. Gold, for a long time, gold was playing around within the areas of 1700 to around 1800, all of that kind of thing. When it got to the 1900s and things like that, you know, we kind of considered that, hey, gold is high, things like that. But gold's all-time high, you guys, was right around, you know, $2,075. You know, that was the all-time high for gold. But because of this war and all of the uncertainty that's been happening, gold has pressed all the way up, and look what it's done. It's almost made equal highs with this particular point right here in the market. So gold is literally in unfamiliar territory to a lot, because a lot of traders that started trading gold haven't necessarily traded gold in this area. So you have to be careful with gold, because gold, it moves extremely fast and the pip count is extremely high. So if you don't know how to trade gold, gold can blow your account if you don't have proper risk management. All right, so we can see within gold, when we're looking at the big picture on here, it came up here and possibly made equal highs, and we can see we got this long exhaustion on the weekly time frame. So let's go ahead and break it down a little bit. Hey, what's going on, you guys? I don't want to miss you guys in the chat. Want to acknowledge you guys. And if you guys see any pairs, if you see any pairs that you want me to mark up, let me know. Go ahead and put them in the chat, and I'll go ahead and mark them up for you. Okay, cool. All right, you guys. So from here, what we want to do, so if we're looking at the daily time frame on the on gold, we can see we got this huge supply zone up in here, and we can see that price has already tapped the supply zone right here. Okay, but because this is so huge, you guys, I don't necessarily want to mark this up from a daily perspective just yet. Let's break it down to the 4 hour and kind of look and see what we got. Okay, so now this looks a little bit more clean to me. So let's check this out. As we can see in this area here, we have a bearish, bullish, bearish. So this is our supply zone that we're going to be focused on and we're going to look at for this particular week. Okay, This is going to be our supply zone for gold. Now there's a couple confluences that we see here. Actually, quite a few. So look, check this out, you guys. In this area here, we have an inefficiency. We have an imbalance right here. Okay. This is one confluence here. And then also, for those who are experienced traders, what do you guys see? Do you guys see anything in the market that looks familiar, that can possibly give you a hint where price is going to take you? I'm gonna wait a couple minutes and see if you guys can actually see it. Because this is a huge one right here for me that I can see. But I also see a couple of things that I can see possibly happening as well. So if you guys are looking at this, one of the things you'll notice is we have a head and shoulders right here. We have a head, and then we have two shoulders. And so basically, when you're looking at a head and shoulders pattern for a lot of my retail traders, basically that's a pattern symbolizing that price wants to possibly go down. So for example, this is what we're looking at. When you're looking at a head and shoulders pattern, price comes up, gives you a shoulder, a head, a shoulder, and then price comes here and possibly goes to the downside. That's what we'll possibly be looking at when it comes to a head and shoulder. Now the head and shoulders, the shoulders not always are symmetricals. You know, sometimes it can be a shoulder that comes up here. You know, this shoulder here can be lower, this shoulder can be higher. But as you can tell, it's still a head and shoulders pattern. Now, here's one of the things that I will be looking for within gold. Let me go ahead and remove these right quick. One of the things I want to see if price would actually come up, possibly tap this supply zone, because as you can see, the supply zone hasn't necessarily been tested yet, and this imbalance has not been fulfilled. So one of the things I want to see, that's one of my main confluences that I want to see. Let's break it down to the 1 hour and kind of look at price action. So as we can see, gold was in some sort of consolidation a bit, and price is not all the way clean. And I said that because you can look at it from here. You can look at price and you can tell that it's a little choppy. But however, this here, for the advanced traders, again, I can see some form of Wyckoff. And basically Wyckoff is a strategy that when price is ranging or price is going to the side, basically Wyckoff is a form of trading or a strategy that you use to trade within a consolidated range. And so I can see that this is almost like a form of accumulation, so to speak. And what I mean by that is when you have accumulation, price builds on the bottom, then the banks, what they'll do, they'll shoot down, take liquidity, and then price will shoot to the upside. So that's exactly what we can see. Now let me show you guys something right quick. I'm going to show you guys a schematic with Wyckoff. That way you guys can actually see exactly what I'm talking about. Wyckoff accumulation. Check this out, you guys. Let's see if I can blow this up. Okay. All right, check this out. If you guys are looking at this Wyckoff schematic, don't really think about all this other stuff that's going on. That'll be a video that I'll do later on for most advanced traders. But as you notice, price started from the top, it broke down, and then it ranged within its consolidated range. But look what it did here. This is what the banks do. The banks will go down when traders, because they know that traders like to put their stop losses and things like that right up under this area. So banks will come down and they'll do what is called a spring to take out liquidity and all of that kind of thing. Let's get our music going again. Let's see. Okay. They'll do a spring which will take out liquidity. It'll market hunt and all of that kind of thing. And people think, hey, you know, the market is against me, all of that kind of thing. But this is a form of trading or a strategy that most smart money traders use in the market. Now, if we go back to the charts, you can actually see that. Check this out. You can see that we're in a consolidated range. And then what we have right here, you guys, this is that spring that we literally just saw right here. This is the spring. If we go back and look at that white cloth, this is the spring right here. Because you can break this thing down and you can say, I have my my trading range, or whatever you want to call it, right in this area, which is your support and resistance lines, which is the same thing that they have here, these resistance and support lines. And then this is your trading range, but you got a spring, you get a test, and then price will probably shoot up to the upside. So that's one of the things that you can look at if you understand Wyckoff. Like I said, that'll be a video that I'll probably be doing real soon. That way people can understand Wyckoff, because it'll give you a different visual and a different lens as to what you'll see within the market. Okay, so let's go ahead and remove that. But that's actually what I'm looking for with gold. I'm looking for gold to come back up here before it makes its big move to shoot down. So let's go over to the 30-minute. Now with this pair, you guys, like I said, that's what I'm looking for. So I probably won't do too much on gold until it actually gives me a clear picture of what it's going to do. So for me, I'm going to probably put gold within this range, this consolidated box here. And then for me, I probably won't trade gold until it actually breaks this area here and see what it gives us. So let's see. Gold breaks resistance lines. And what I probably would do is probably mark this thing up with some Wyckoff. That way we can actually see the different moves and things like that. And if that's something that you guys want to see, if you guys want to see this thing marked up with Wyckoff, just let me know in the chat, and I'll be happy to do that. Let's see. Gold breaks support lines. Yeah, that's how I'll do that. And let's actually put those on here. That way we can kind of see it on the charts. Let's see. Yeah, we can utilize this area right here. Oops, that's not what I'm trying to do. We can utilize this here. We'll call this our resistance lines. Bam. We'll call this down here our support lines. Sammy, what's that? Vom.red. What you talking about? What's that? I don't know what you mean. So this part here, I'll put this right here. Nah, right here. If it breaks my support lines, I'll know what the deal is on that. But as you can see with this Wyckoff, there are a couple of things in all of this, like you got your selling climax, automatic rally, all of that kind of thing. And so, like I said, I'm not gonna get deep into that, but you can see there's the different phases. So let's see if we can actually identify some of those right quick. And I'm just gonna mark them up on here just for future purposes. So this here, this is my PS. This here is my selling climax. I'm gonna look at this up here is my automatic rally, my AR. We have a ST right here. And one of the things, guys, your Wyckoff schematic, they won't look exactly like the actual schematic on the thing, but there will be some moves that will correlate with it. So there's no schematic exactly like the drawing, but the drawing gives you a baseline to understand the different moves and the different phases. Okay. And then from here we have a spring. Well, this little move right here can be known as our ST in B, which is phase B right here. And then from there we got our spring, which is right here. We got our spring, and then this move right here is our test. And so when you're trading Wyckoff, this actually is the entry in which you'll take. Or if you're on a smaller time frame, this right here could be classified as the test right here. And this here would be known as an LPS, which is a last point of support. So you can look at it either way. It just depends on what time frame you're on. This here can be your LPS. So if we look at the schematic, you can kind of see some of those things. You got your spring, your test, LPS, and then you got these other situations as well. So you can kind of see how the schematic kind of play out. And in this area here, you can actually take a buy. Let's just say, you know, if we caught this test right here, stop loss could have been right there. You could have rolled this all the way up to the resistance lines, and that could have been about 379 pips or so on gold if you caught this actual move. Because when you're trading inside of Wyckoff, like I said, this here, in between here, this is considered as your trading range. Let me see, it's not on here, but these areas is considered as your trading range. So if you can catch something up here with the AR, you can possibly ride it down here to your support lines and then vice versa. So that's one of the beauties with Wyckoff. If you can understand the schematic and you can study it and see exactly how it's forming and all of that kind of thing, then you can possibly capitalize off of it. Hey, you guys, do you guys got any other pairs that you guys want me to mark up? If not, you know, I'm gonna wait a little bit and see if y'all got anything else y'all want me to mark up. If not, you know, we're gonna hop up off this thing. But you guys, I hope you guys learned something though. This is how I usually approach the market on Sundays. I usually just follow the same style, the same ritual. I don't do anything too drastically different. I usually just break everything down and make it simple. You know what I'm saying? Your trading don't have to be so difficult. You just follow your same parameters. I do top-down analysis, start from the weekly to see the big picture. And then from there, once I kind of mark it up from a weekly perspective, then from there, I kind of dial down to the different time frames. I'll stop at the daily, 4 hour, sometimes the 1 hour, but I'll go to the 15 minute, the 1 minute, and the 5 minute to actually hone in on my entries. And I repeat those cycles over and over and over again. And from there, I can catch really, really good entries, and I can ride price up to price action to see exactly where I want to go. All right. So we're going to wait a couple more minutes to see if you guys want me to mark up anything else. All right, it looked like we don't have any other pairs or anything that anybody want me to mark up. So hey y'all, again, I want to thank y'all for rocking with me today. Man, it was a pleasure. So what we're gonna do, we're gonna try to see if we can do this every week. Like I said, if y'all go to the channel, let me know in the messenger or whatever. If there's any pairs y'all want to see me mark up for the week, if there's any strategies or anything that you want me to record as far as a video, I'll be happy to do it. Like I said, here at the Pips Academy, we focus on all strategies. We do retail, we do smart money, we do swing trading, we do scalping. Anything that you guys want to see, we just kind of break it down for you guys. And one of the most important videos I think I'm gonna focus on probably this week or the next couple of weeks is how to do a trading plan. Because if you don't have a trading plan, if you don't understand your why as to why you're trading, it's a moot point while you're trading anyway. So we're gonna go over a trading plan, risk management, all of that kind of thing. But we're gonna get it in, you guys. And like I said, I want to thank you for rocking with me. and I'll holler at y'all.